Why do we care so much about interest rates? Did you know that putting so much emphasis on the interest rate could actually be stalling your progress towards your real estate goals? If you've been waiting for home prices to come down or interest rates to drop even further, or maybe you're trying to time your next move, then there's two things that you'll learn from this video. The first is how this final rate cut in 2024 is going to impact home prices and overall housing supply in the short term over the next 2 or 3 months. The second thing you'll learn is what you can expect the real estate market to be like in the long run. So what does it look like in January 2025 all the way to 1 year from now in December of next year? And to answer these two questions, I'll show you what's been happening over the last 2 months after October's jumbo rate cut of 0.5%. Because once you have all that information, you'll then be able to make sense of the current market to get that clarity on what your next move is.
The market's in an itsy bitsy little gully right now. Okay, that was crazy. Let's just all calm down.
But why is that important? If you're in the early planning phases of your home search, I'm also sharing 4 crucial steps that every potential home buyer needs to make so that you can prepare yourself for the 2025 real estate market. Let's go. So here we are in the last month of the year with the last rate cut for the year. 0.5% is what they're calling a jumbo rate cut, but don't be fooled by that, and I'll tell you why. The Bank of Canada delivered this jumbo rate cut right in time to correct the housing market that's overflowing with supply, with cranes all over the GTA building new condos. No, that's actually a lie. The Bank of Canada wasn't too focused on housing this time around when they made their decision, and instead there were 2 other factors. The first is unemployment. Unemployment was one of the 2 main focuses for the Bank of Canada when they decided on the rate to drop to 3.25%. That's the lowest it's been ever since September 2022. But should we really be calling a 0.5% rate change a jumbo rate cut? People often forget that the overnight rate changed by 1 full percent just 2.5 years ago in July 2022. So what would we call that? A mega rate cut? A whopping rate cut? Where's that whopping rate cut today? The fact that the unemployment rate jumped to 6.8% in November is what led to the Bank of Canada to drop the rate by 0.5% right before going into the new year. And that's up from 6.5% in October, which is actually the highest it's been in the last 7 years since January 2017, excluding the pandemic. And so today the unemployment rate is now at a level that we have not seen outside of Canadian recessions, while the jobless population gets closer to pandemic levels. But why does a lower bank rate help the unemployment situation? Here's how. A lower interest rate helps by making borrowing money from the banks more affordable for both businesses and consumers. This ends up stimulating economic activity and people everywhere are spending more. And as a result, buyers and sellers and the overall housing market benefit as well. The second reason why the bank is not just focused on housing is because of inflation. Everyone is feeling the impact of inflation. Higher food prices, higher fuel prices, just basically everything is more expensive these days, which is even making holiday shopping incredibly expensive. Quick story. I went out to buy a new pair of boots the other day at Fairview Mall because mine weren't comfortable anymore for some strange reason. I bought these 7 years ago for $150. I bought the same boots for 2.5 times the price I paid 7 years ago. That's inflation. Canada's inflation rate was 2% in October, and it's expected to stay at around this target in 2025. And the bank has to be careful when they're considering inflation because there are 2 things they don't want to happen. They don't want inflation to climb up because that would be 2022 all over again. They also don't want deflation to happen, which slows down the economy when consumers and businesses start speculating prices to come down. So by lowering the bank rate by 25 and 50 basis points each time, the bank makes it easier for businesses to borrow money, which allows them to expand. And this eventually leads to more jobs being created, which reduces unemployment. And in the end, more jobs and more cash in people's pockets results in more people getting back into the housing market. But now one question you need to ask is, how effective are these rate cuts of 25 and 50 basis points? I can tell you that the 0.25% rate changes did not do much to the housing market, not even after 3 consecutive rate cuts in June, July, and September. The last time in October when the rate dropped by 50 basis points, did we actually see a change in the real estate market? Let me show you what happened. Between October to November, sales dropped from $6,700 to $5,900. The average home price dropped from $1.135 million to $1.1 million. Wait, What? Just think about that for a second. Sales and home prices both came down after the Bank of Canada did their first jumbo rate cut. How is that possible? It goes back to what we were talking about with unemployment and inflation, and what we need to see happen for more economic stimulation in the housing market. More jobs and more cash in people's pockets results in more people getting back into the housing market. The economic risk in those two areas are still high enough, so much in fact that we're not seeing an impact on the housing market even after 4 rate cuts. So the question is, was the rate drop by a total of 1.75% this year enough to create an impact on the housing market in 2025? Here's the answer. I love movies, so I'll use this analogy. This year was like Avengers Infinity War, where it eventually set up everything that happened in Avengers Endgame. Let's just hope that no one blips. Now, what does all this mean? People are not getting into the real estate market right now because of 2 factors: unemployment and inflation. So what does the bank have to do? They have to stimulate the economy by dropping the rate with another jumbo rate cut. The bigger question is, will this rate cut actually do something this time? And what I mean by that is, will we see more people getting back into the real estate market in the next couple of months? People are generally less active in the market during the holidays. It's the time of the year when most people would rather just relax and not think about moving. If qualified buyers are getting mortgage rates of around 4.7%, then those rates could come down in the 4.2 to 4.4% range within the next month or so. But someone who's really planning ahead might wait until January 29th, when the next rate cut could potentially happen. Or if they're trying to wait until the spring market, March 12th or April 16th, for further potential rate cuts. And I can tell you what's likely to happen during those announcements by the Bank of Canada, which we'll talk about next. Wouldn't it be great if we had a crystal ball to tell us what's going to happen in the real estate market next year in 2025?
Then tell me, future boy.
CIBC is forecasting a 2.25% overnight rate by the middle of next year. That's a 1% change between now and June. And if they're correct, that only leaves 4 opportunities between now and June next year for the bank to drop the overnight rate by another 1%. Maybe they'll do 2 jumbo rate cuts, maybe a single whopping rate cut. A drop by 1% in the next 6 months would accelerate economic growth, which is what maybe this economy needs. And if that's the case, how do you plan for this if you're trying to make a move in the next year? Here's what you can do. If you're in the market to buy your next home, you need to figure out what rate you can get before committing to the purchase. The reason why this is important is because of how fast things are changing. Think about it. In the last 6 months, the Bank of Canada has now made 5 rate drops, which have impacted mortgage rates. Here's a true story. I had a client who got a mortgage rate of about 7% earlier this year, and they could have gone now a rate closer to 4% if they were able to hold out another half a year. The change in home prices between then and now is not that much, but the amount of interest paid on the loan is pretty big. The main thing here is that if you can get a rate that you're happy with and you can maintain it while knowing that there's a good chance your payments will go down if you get a variable mortgage rate, then you're winning. Tip number 2, your down payment makes a difference in what rate you'll get qualified for. So the more you put down, ideally more than 20%, the better your rate will be. This is because you want more skin in the game, and the bank will actually like that. You'd be considered a lower risk borrower. On top of this, you avoid paying monthly mortgage insurance premiums. The next thing you're going to do to prepare yourself for 2025 is to make sure you keep your income consistent, or you find a way to increase it. The banks need to see that you're a stable individual who has consistent income. They don't like risk, and you might even lose your chance at getting the best rate for yourself if you can't qualify with the bank and instead have to work with a trust company, which normally qualifies easier but charges a higher interest rate. Finally, the 4th tip to prepare yourself for 2025 is related to the offer you make on your next home purchase. If you're not familiar with the offer process, there's a video you can check out where I detail the entire process, which I'll link somewhere up top in this video. But ideally, you want to keep the financing condition in your offer. What's happening today is that sellers are not turning down offers with conditions in them. If this was a hot seller's market, I would be giving you different advice right now. But going into 2025, it's still perfectly fine to include this condition, and you don't have to worry too much about the seller asking you to remove it. But even with these tips, they won't help you if you don't fully understand the risks involved if you're buying real estate in this type of market, where buyers over the last couple of years have been losing money. And to know what I'm talking about, click on this video and you'll learn how supply has been an issue for the Toronto real estate market, but not in the way that you're thinking. Subscribe to stay updated. Thanks for watching, and I'll see you in the next one.